Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 15th of October 2018, and we are asking the question, is President Trump right in his approach to China, and is it a friend or foe? 3 days before US President Donald Trump took office in January 2017, Chinese President Xi portrayed Beijing as the champion and defender of globalisation at the Davos World Economic Forum amid rising fears of trade protectionism. But how has China performed since then? Especially since we now have rising US tariffs, higher interest rates and capital flight from emerging markets, all of which threaten to erode global growth. Well, a little was revealed at the IMF and World Bank annual meetings in Bali last week. Charles Dallara, former head of the Institute of International Finance, is reported as saying, quote, "I think there is a broad view growing in the West that China has in some ways taken advantage of the system. It reminds me of the view in the West of Japan in the 1980s. Very much so." End quote. Now let's all be real here. That is a gross political understatement. China has to a large extent deliberately devalued its currency over the years, dumped low-priced products on international markets, stolen intellectual property rights, and restricted imports into its own country, thereby protecting its own indigenous industries. One major goal of President Trump's trade war with China is to send more US-made products there than Chinese companies export here. He has attempted to deal with this by increasing tariffs on Chinese goods up to $200 billion worth. Now, despite this, just reported, America's trade deficit with China reached a new high, $34.1 billion in September. That's a 13% increase compared to last year, and is the second straight record month after a deficit of $31 billion in August. That takes America's trade deficit with China for the year to $225.8 billion, about $30 billion more than at the same point in 2017. Okay, now to be fair, it's too early to tell whether this policy will eventually work. However, the rest of the world has at last begun to wake up to the economic threat, as well as opportunities, that China presents. According to the National Bureau of Statistics data, China's gross domestic product grew 6.8% year-on-year in the first half of 2018 to about 41.9 trillion yuan, or $6 trillion. A pace well above the government's annual growth target of around 6.5%. So this has led to calls to fix global trading rules, not just from the US administration, but also from IMF Managing Director Christine Lagarde. She said at last week's conference, quote, "This means looking at the distortionary effects of state subsidies, improving the enforcement of intellectual property rights, and taking steps to ensure effective competition to avoid the excesses of market-dominant positions." Unquote. Now, she did not specifically mention China, but it was clear to whom she was referring. But Pierre Moscovici, the European Commissioner for Economic and Financial Affairs, said, quote, "We absolutely need to address the issue of overcapacities in China. Nobody can say that this is not a problem. This has to be dealt with." Unquote. Now we have to be clear here. China is still a major political and economic power. But it is now beginning, some would say at last, to attract the ire and condemnation of much of the international community. Some delegates from China expressed frustration that Beijing's agenda was being bypassed, while international institutions had largely been ineffective in deterring Trump's tariff actions. Although there are reports that Presidents Xi and Trump will meet at the G20 Leaders Summit in November, Steven Mnuchin told Reuters that currency issues would be part of trade talks and that the onus was squarely on China to take concrete steps before trade talks could resume. So what does this mean for gold and silver buyers and investors? Well, let's be candid about this. China is one of the world's current largest purchasers of gold and silver. In fact, if you look at the yuan, although it has devalued, it has in recent times closely mirrored the price of gold, leaving many to believe that there is now a formal, though not necessarily official, peg. Any redressing of China's growth and trade surplus could severely hamper its purchase of these precious metals. Now, this could be balanced elsewhere by other countries gaining their surplus back, but there is no guarantee that the desire or thirst for precious metals may exist there, though admittedly demand for silver for industrial purposes should rebalance. What is more concerning, however, is that no one knows exactly what the outcome or repercussions of the tariffs and trade sanctions and any other actions the World Economic Community may take against China will be. If China is economically damaged and the trade moves to the West, and especially the US, then we can see a powerhouse of physical precious metal purchases declining and the US dollar strengthening as a result of world trade rebalances. What are your views? Please do share them with our community. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and pressed the bell sign so that you are notified of any future videos. Kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.